Hi, I'm Roger Montgomery from rogermontgomery.com and welcome to another episode of Value.able TV. Thank you very much for all your contributions and suggestions for the name of this video series, and I'm delighted that you're taking part. Today, the 5th of August 2011, is a perhaps unique day. The Dow Jones closed down 511 points overnight, and our market seems determined to do exactly the same. In fact, what's interesting is there's some very high quality companies that have fallen by a lot more. So what I'd like to do today is help you reset the compass, keep you grounded, keep you focused on the long term. It's very easy in markets like this to use a microscope, to worry about every gyration up and every gyration down. But instead of focusing on prices, we need to use a telescope. We need to think about the long-term intrinsic value of companies. Companies that were cheap before are even cheaper today. Has the value of those businesses changed? Has the outlook for the change in value for those businesses, is that any different? The objective of investing is to buy, well, the value investing methodology that we talk about is to buy great quality companies when they're cheap. Now, just because you buy at a discount to intrinsic value does not mean that the short-term price will not go down even further. Back in 2007, ARB, a company that I regard as an A1 amongst A1 businesses in Australia, run by Roger Brown for 36 years, fell below its intrinsic value in 2007. And yet, even though it was below intrinsic value, and even though intrinsic value subsequently increased substantially, the share price over the next 18 months into the GFC fell 40%. I have no idea where share prices are going to go tomorrow or the next day or the next month. I don't even know where they'll be next year. But what I do know is that over time, buying great quality companies when they're cheap, and buying great quality companies means buying businesses whose intrinsic value is going to go up over the next year, 5 years and 10 years. Buying those businesses at discounts to intrinsic value allows you to see the sell-off for what it is, an opportunity. How are you seeing it? Are you seeing it as something to fear? Are you worried about tomorrow the share price going down even more? Are you worried about the Dow Jones collapsing over the next week, month or year? It may happen, I don't know. But what I do know is that we're focused on businesses, not stocks. We're buying pieces of great companies, not buying bits of paper that wiggle on a screen. If we think about quality and value, then what we have is an anchor in the tempest that is the market all around us. See this sell-off then for what it is, an opportunity rather than something to fear. I'll see you next time on the next episode of Value.able TV.